Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for March 16th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Here we are post FOMC statement and Fed Fund interest rate decision, and now price pushed beyond 23.76 half. That was what we mentioned before, was that the bears were defending that level and buy stops were above it. Pushing through 20.76 half implies perhaps a retest of the recent high at 2400. Any failure to hold above this level would suggest a rejection of prices above there for the second time in a row with a lower high kicker here, and that may lead to a little bit of a move downward toward the previous week's low. But at the moment, the range is 2400 down to 2354s, and holding above 23.76 half suggests a climb to retest 2400. Failure to hold this level would retest the recent lows. So right now, we're still in the overall uptrending market. The price continues to trend higher. Every pullback so far has been bought during this advance, and right now pushing through 76 half opens the door to more strength if bulls can keep that area bid. Now, if we look at the intraday time frame, here it is. You'll notice the previous session very quiet through much of the day. FOMC statement comes out, 23.71 is the open price right on the Fed, and we get an immediate rally here. And right now, we're seeing kind of a rejection of the previous session's high here, and bears are coming in to defend it from below. So there's an absorption signature that's developing here off 23.88. After you've seen, rather the wrong one, after you see a rally from the FOMC level like this, whenever you find rejection, there's a tendency to come back and retest it. So 23.71 could be retested here at some point if bulls cannot recapture prices above 23.88. At the moment, an absorption signature is defending that zone. Bears are defending that zone for a likely retest at 23.76 half and a potential move into 71s. So that's the intraday outlook here. Now looking at the NQ. The NQ got a big time push here through recent resistance. So if we look at the higher time frame here, the level that we were talking about before was 5400, and the fact that bulls were defending 53.76 half implied more strength once price could get through these 5400s. We talked about the ascending quality, and the target we shot for was 54.42, and we got to 54.40 high today, so came right within 2 points of that 42 there, and is showing a little bit of rejection here above that zone. So again, very similar to the ES here. After pushing through recent resistance here and pushing away from the FOMC key level, we could see a push back to retest it, and then from there maybe see another round of strength. So looking at the intraday time frame here, there we go. The previous session, I don't have it marked on the chart just yet, but that's the open price right here, right at 1 o'clock. It's 53.96s, and you can see price has gone straight up since. So basically this key level right there, 53.96, and right now bulls failing to hold above the previous session's high at the moment. That could pave the way to more weakness, eventually back toward 53.96. All right, now taking a look at crude oil. Here's a look at crude. If we go to the higher time frame right now, you'll notice that crude continues to bounce after that rejection tail that we saw a couple of days back. So once we saw this tail here, the expectation was that we could be looking for a push back toward 51.71, perhaps as high as 52s. That was the expectation here. And all we needed to do was look for bulls to defend 47.90, the pullback midpoint zone. Bulls came close to it and then closed above the previous session's high today, already pushing and trading above the previous high. So we've seen a nice bounce here on a multiple day basis. However, this is a downtrending market. And as I mentioned before, breaking down out of this tight range here has much more energy to release than what we've just seen. So the first pullback could be a selling opportunity for a continuation downward that takes this thing perhaps to the other side of the range, between 42 and 43. So I'm not saying this is the moment to sell, but at some point here we will begin to see weakness, and that could perhaps lead to another round of weakness here to the downside. Now the tricky part is this bounce could be as high as 52s. I mean, we could bounce as high as this and still be considered a selling opportunity for a move downward. So at the moment, still kind of flowing to the upside, but at some point here we could see an opportunity on a swing basis to sell it back down. Now taking a look at the intraday time frame. Here we go. The previous session here we saw a push higher right at 1 o'clock. The 1 o'clock is about right here. So initially the move is to the upside, comes back, holds value, and eventually we shoot off. So again, at the moment, we're seeing price push into 49.50 right here, reject off of R3, and then resistance, 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 lower highs. If there's not an ability to get back above 49.50, then we could be coming right back to 5-day VPOC and that FOMC level, which would be between 48.50 and 48.60. All right, now taking a look here at gold futures, we've had a significant rally in gold, and this is something to watch out for here because we've also seen a push up in the ES. We saw a rally initially in the bonds, and gold took off as well. This one rallied big time, running the stops through resistance. And this is something I mentioned yesterday. The expectation was that bears were defending for a shot at new lows, perhaps into 1180 to 84.5. I did mention any push back above the previous close here, 1205s, would begin to run the stops back up. And so that's something we finally saw yesterday happening live in the trading room. And so we started to see the higher lows develop. And at that point, we were looking for a day trade rally back toward resistance, 1204, 1205. And then once the FOMC came out, much more strength was seen. The upside buy stops were run, and all of a sudden we're back to 1232. So this was an opportunity I had here yesterday, looking for options to buy them into this move into 1232, and it's already happened in overnight trading. So this is a big time push here. Looking at the intraday time frame here, there it goes. You can see this is the point right here where the 1 o'clock open comes out, and that's right at 12:02. That's when the FOMC comes out. Initially a little bump down, then a big rally right here through 12:05s. The higher lows came in right here for the day, and about right here we were switching our tune that this thing might rally back toward resistance. Again, above 12:05 squeezes, and that happened after the FOMC. It's been a significant push. First moved back to 1220 to 1221, and then now we're getting back above that level and into value at 1232. After a significant rally, there's a tendency to see a range develop, and from there we could see a balanced trade occur. So I don't know if we've formed that range just yet, but if we get back to the midpoint, say this thing were to drop around 1228, we may have a range from 1232 down to 1223, and that could be the range here to fade new highs, fade new lows as this thing develops at these highs after the recent rally. So something to consider. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.